All right, folks, I've been calling this rally sort of the summer stroll, right? And that's exactly what it's been. Some say we're whistling past the graveyard, but I don't know. And in many ways, we actually could get even better, although we know August is rough and September is rougher. My next guest says things have been working out pretty slow and steady, and I think he thinks it's going to stay that way. Let's bring in Strategy Asset Managers CEO Thomas Hulick. So, Thomas, just overall market, I mean, you've got to be impressed with this market, whether you're bullish or bearish in general, just the resolve, if nothing else.
We are. We continue to be optimistic. We think that the market's going to take a breather in the second, I guess, in August into September. But
the second half of this month.
Yeah, I think so. I think things need to cool down just a little bit. But
what happens when you think the market needs to cool down and it doesn't? What do you do in a situation like that?
You want to be invested.
Right.
You want to be invested in the market, and you want to know what to own and what not to own. It's important to do that.
So let's talk about what to own. I was reading your notes, and you like healthcare here.
I do.
It's acting pretty good today. #1 sector today. It was acting pretty good yesterday. Obviously, it's been a huge disappointment so far this year. What's turning things around?
Well, if you look at the chart, it doesn't look very good for owning healthcare stocks right now, and that's why we're not concentrated in the area. But we do like Lilly, and we like the outlook and what happens when you own a stock like Lilly that has such a tremendous marketplace ahead of it with the GLP drugs. Take, for instance, Retatrutide. That's a phase 3 drug that they have on the market right now. Right. It's improving the efficacy for somebody that wants to do weight loss or obesity, and there are other implications for anti-inflammation there. But I think the healthcare sector long-term is positive.
Sure.
And we like.
On the Lilly thing, and I mean, it just took a hit recently, though, right? Whenever they drill a dry hole, particularly when anticipation is this high, and competition, things like Viking Therapeutics, obviously Novo's got some other things in a pipeline. This area is really still unresolved in terms of who's going to be #1, let's say 2 or 3 years from now.
Well, huge market opportunity in the GLP space.
That's the bottom line right there, right?
Yeah. And they're the leaders. They've got next generation drugs that are still in the pipeline, and they're probably going to backfill with new drugs down the road. So we like Lilly. We actually just bought some more.
Kinder Morgan, again, in a space that's sideways at best. The stock itself has been relatively sideways. We've got a 52-week chart up there for the audience. What do you like about it here?
Well, I think it's all about power. We like Kinder Morgan. If you're not familiar with it, we own it. 79,000 miles of pipeline to help energy transfer in the U.S., but it's all about power. And how do we get power to the utility companies? Constellation Energy Group, for example, is another thing, Camco. But power is more important right now in energy transfer and power.
In a market like this where you've got some winners who are just keep winning big, and an investor would say, well, what's a part of the value proposition? Often with a stock like this, it pays a pretty hefty dividend. Or is that the case here as well?
Yeah, the dividends are right around 4% for the utility company.
That's pretty hefty, particularly as yields start coming down.
Yeah, but it's a supply and demand issue right now, and we're trying to close the gap with that. I mean, there's a number of the hyperscalers, for example, if you want to transfer into that conversation, they need more power. How are we going to get the power to them? Energy transfer, Kinder Morgan is one there, and then how are we to supply the power with nuclear, uranium, CEG, Constellation Energy.
Right. Utilities, again, having a heck of a year. And I guess the value proposition there used to be, hey, it's a safe haven, but now it's a sort of part of the AI trade, isn't it?
Correct. I think I was told that it's the second best performing sector in the S&P 500 right now, behind technology. It's important to know what to own. And that's why we've talked to our clients about owning specific utility companies that are going to benefit from power and the demand for power in the future.
So if you're anticipating some sort of a pullback or a lull, how would you be invested? Would you be 100% invested, or would you raise some cash to sort of try and take advantage of this upcoming pullback?
Well, as an active manager, we always have a portion of our portfolio in cash, but I think this market is the next generation bull market that you don't want to miss out in. We're very optimistic.
Ride the waves.
Yeah, ride the waves.
I mean, they're inevitable. They're going to happen.
Summer doldrums right now. And, but we think the Fed's going to cut. Eventually in September. We think they'll follow up with a cut. I think that will be a catalyst for the market. It may even help the housing market.
What's your greatest anxiety? You're worst fear right now with respect to the market? Are you concerned about anything really?
I think the concern would be if the Fed doesn't cut.
Okay. Yeah.
And I think a lot of people are feeling
You're the
same way.
second guest that said that today.
I
so.
saw that, and I agree with it.
All right, good stuff. Great, Tom. Appreciate
Charles, thanks very much. Can I just say happy birthday to my mother, Jane. She's going to be 89 tomorrow.
Wow, happy birthday, Jane.
Happy birthday, Jane.
Beautiful.